I'm Michael Levine. I'm Senior Vice President and Private Bank Division Manager here at First Liberty Bank. Dental lending can be very complicated. We're going to discuss details of the loan structures and also what to look for when developing a relationship with a banker. The first is acquisition financing, or it could be essentially startup financing. These are generally 7 to 10 year loans. If you do work with a bank that is dental friendly and that understands the dental industry, you can typically find 100% financing for either acquisition or startup financing. The other thing with the acquisition financing is discussing an interest-only period, or what we call a hold period, for the first several months. The most fragile time in a dental practice is right when you get in. So having as much excess cash flow as you can have to really help and kind of keep in your tool belt to deploy elsewhere is really beneficial. The second type of loan structure I'd like to talk about is equipment financing. This is very similar to the acquisition financing in that these are typically term loans. Generally, they will go out on the amortization as far as 7 years. Typically, they don't go any further past that. Equipment financing, more often than not, can require down payments of anywhere from 10 to 20%, depending on if the equipment is new or used. The third type of loan that a dentist will come into contact with generally is a line of credit. A line of credit is a loan type that you would use to help pay for what we call working capital. That's kind of your day-to-day operational expense. It allows you to continue to fund the operations of your practice during either slow times or times when collections, that cash flow isn't coming in as quickly as it needs to. It's a revolving line of credit, so it advances up and it gets paid down. It advances up and it gets paid down. That is the best way to utilize a working capital line, and it can be a very useful tool for practitioners. The last loan structure that I want to discuss is real estate financing. Of course, there's financing for acquisition of a piece of real estate to essentially construct a new building for their practice. And there's also what are called tenant improvements. If you're looking to lease a space, you will be making some improvements to essentially make it into a dental practice or be able to house a dental practice. Amortizations for real estate financing are typically longer. Those are typically financed out to 15, even up to 20 years. With your construction financing, the construction loans are typically an interest-only structure during construction, and then you would supplement it behind it with what we call mini-perm financing for a term of 5 years on a 15 or 20 or even longer year amortization. Tenant improvements typically are financed over the course of about 7 years. You can find some banks that will finance them a little bit longer, but the general practice is anywhere from 7 to 10 years on tenant improvements. The personal credit is vital. We always say good credit standing cannot solely qualify you for a loan, but it can solely disqualify you for a loan. A benchmark is typically about a 680 or above credit score. Anything above 700 is good, and that's kind of what you want to shoot for. The other thing that the dentist should expect is personal guarantees on the loans. So what this means is that where the borrower will be generally an entity, an LLC or a practice entity, the dental professional will have to personally guarantee the note, which means that in the event of default, that they are personally liable for the debt. The third thing that they'll want to consider is life insurance. And a lot of banks will require a pledge of a life insurance policy that will be at least equal to the amount that person borrows. It's important that a dentist looking to acquire a practice consider getting a third-party evaluation. It's important for both the purchasing dentist to have an objective opinion, outside party, essentially look at the true value of the practice. In addition to a practice valuation, it is very important that a dentist consider projections. It does paint a clearer picture for both parties and help with credit decisions as well. We've talked about the types of loan structures and what a provider can expect going into a practice acquisition or startup. Now I want to talk about what they need to look for in a banker and a banking partner for their practice. It's very important for a dental provider to find a banker that understands the ins and outs of running a dental practice. The provider also wants to work with a bank or a banker that also supports the industry, not only monetarily, but also with volunteer hours. The next thing that you need to look for with your banker is, do you like them? Do you get along with them? Your banking partner should be somebody that you enjoy working with. You want to be able to have a good relationship and develop a relationship with your banker and enjoy working with them and their bank. You need to think of your banker as a partner in the business. Ultimately, what is good for you is good for the bank. The final thing I want to communicate is that building a relationship with your banker matters. Banking is, and it always will be, a relationship-based business. There's so much more to a banking relationship than just what does it cost me to do this. Generally, a low cost can typically result in greater cost down the road. So you want to choose wisely and don't base your decisions strictly on cost. Your banker has a vested interest in your personal and your professional growth, so it's very important to align yourself with a partner who understands what those goals are and helps you work towards them. We hope this has provided a great resource. We're here for any additional information, or you can, of course, contact the ODA as well.